guys that run these companies are not dumb enough to buy those ETFs with their own money, but they're happy to let customers do it. But they're money.
And well, I have to go now and eat my $40 piece of salmon that was $10 5 years ago. So, Peter, you're the best.
Right. Take care. I could probably go for another maybe till 7. Then I got to eat my dinner.
Peter, if I could just quickly say, I think it's almost time for you to take a bow with everything you've been saying over the last few years, with what's happened with the economy, politics around the world, and gold and silver prices and reaction in the markets for the last 18 months. You can soon take your bow and say that you weren't initially right, but you were right in the end.
Yeah, I mean, I like to resist the temptation to, say I told you so just yet and claim victory, because there's still things that I think are going to happen that haven't happened yet. So I'm not like going to do a complete victory dance. I don't want to celebrate, because I recognize that for a lot of people, what's going to happen is going to be very painful, including like even the people who are going to get wiped out in Bitcoin. I mean, I have a lot of good friends that have a lot of money in Bitcoin, despite the fact that they're friendly with me, they haven't sold their Bitcoin. And, I can't really press them. I mean, it's their money. They do what they want with it. And I'm not happy that they're going to lose that money. I mean, but I also know that if they sell their Bitcoin, it just means somebody else is going to lose it, right? If I have to take it. But there are some people that own Bitcoin that are just so goddamn arrogant that I'm happy they're going to lose their money. They deserve to lose it, right? There's some people that deserve to lose money. And I just hope that those people, and most of them are young, and so that's fine. If you get wiped out in your 30s, you got plenty of time to earn your money back. What I don't like is when I find out that people my age have a lot of money in Bitcoin. That's dangerous. You're in your 60s, you're in your 70s, and you lose all your money. It's not that easy to earn it back.
No, does your son still have Bitcoin?
No, my older son, not really. I mean, he had to sell it for other reasons. I think he got out of most of it around 50,000. So, but he didn't make that much because he never had that much in it. He bought it at around 10,000. But he just lost interest in it because he became fixated on AI. That became, everything he was in on. I mean, I wish it would have been great if he bought a bunch of AI stocks, but he didn't do that. But he wanted me to, though. He was trying to push me into it, but I don't think he really did much himself.
Okay.
He's only 23, so.
Yeah, he's still got a lot of time to learn, isn't he? Pleasure to speak to you, Peter. I'll let someone else speak now. Thank you.
All right, great. Who's up next? Anybody ready to talk? Let me see. You can raise your hand, because I've got a few people that can unmute themselves. But if someone raises their hand, I'll just let you. So there we go. Okay, that is end game, I guess. That's appropriate. Hello?
Hello.
Yeah.
I had a question about Newmont. Newmont is having their earnings later this month in October, and with the CEO stepping down, do you think that'll cause any jitters in the stock?
Well, so Newmont just got an upgrade. Somebody upgraded them today to a buy or something. And look, I think that this next round of earnings, you see what's happened with these gold stocks. A lot of them, for years, even though the price of gold was going up, they were missing a lot of the earnings estimates because their costs kept going up. And so their costs would go up, and so they wouldn't make money, or, they had production delays or things would happen. But, I never was bothered when a gold company came out. Like when I bought my first shares of Agnico Eagle, when the stock, dropped below $10, the event was a rock slide. And the rock slide meant that they weren't going to make their earnings because they couldn't operate the mine until they cleared all the rocks. And so people were all upset that they were going to miss earnings for a couple of quarters. And in my mind, I was like, who gives a shit? Because as far as I'm concerned, the later they mine the gold, the better. Because I just thought it was going to be more expensive in the future than it was now. And if they had to delay their mining, catalyst for a lot of re-ratings. A lot of companies, when a company comes out with really great earnings, before their stock starts to trade, all of a sudden Wall Street says, "Oh, okay, we're putting a buy on this stock," and they get to score the buy on the price it was when they upgraded it, even though nobody can buy it until it gaps up on the news. But I think Wall Street's going to start, upgrading these stocks. The earnings are going to be great, and then what are the companies going to announce they're going to do with all this money that they're earning? Well, some companies may increase their dividends. Other companies may increase their share buybacks or initiate their share buybacks if they don't have them. So either way, if you're going to buy back stock or you're going to pay dividends, that increases the value of the stock. That's something like Bitcoin can't do. Bitcoin can't pay a dividend and it can't do a buyback because it doesn't have any cash flow. But these gold mining companies generate a lot of money. Like you look at Newmont. So Newmont is trading at like 16 times earnings. But once they announce their new earnings, it may be at 12 times earnings or 10 times earnings. Because what they're probably actually earning is a lot more than what the street has forecast. And then a lot of it is their guidance. Like, okay, what did you earn this quarter? And let's say they earned a ton of money this quarter, and the average price that they got for their gold was $3,600. But when they announced their earnings, gold is $4,200. So as much as they earned in the third quarter, they're going to earn even more in the fourth quarter because the gold is a lot more expensive. Right? So this is a huge dynamic, and no other business has this kind of pricing power. You can't just increase your price the way a gold company can and not lose any sales, right? If you're selling a product and you jack up your price by 50%, some of your customers are not going to buy anymore. But if you're a gold company and you raise your price by 50%, you're not going to lose any customers. You're not going to lose any business. Your customers are going to keep on buying. They're just going to pay 50% more. In fact, gold is one of the rare things where the higher the price goes, the more people want to buy it. It's not like a normal commodity where if the price goes up, I want to buy less. No, I want to buy more.
Yeah, I know. I've made a lot of money off Newmont this year. I'm a big shareholder. I've been selling puts, buying calls, and stuff like that. So I was just, curious about your thoughts on the CEO stepping down. You don't think that's a cause for concern at all?
Yeah, there's been people worried, why is he going? What does he know? And, people have personal decisions, in their lives, and they move on with their careers, they retire, so it's like, I'm not think, he knows about some hidden time bomb, he wants to get out of Dodge. People have always could find reasons to be nervous. Newmont's the biggest gold mining company in the world. I think they're in great shape. I think they're going to be going on a buying spree. So yeah, you might make more money if you know the companies they're going to buy, but they're going to really expand their production base because they're going to have the cash flow right now to make some great acquisitions.
The tobacco company a lot this year and have gone up. Do you still like these tobacco companies at these prices?
Yeah, I do. I like tobacco stocks. Not that I think people should smoke. I don't. But I know they're going to smoke. And as long as they're going to smoke, I might as well cash in on it. I think they're good businesses. And I think that people are going to smoke more when times get bad. They're not going to smoke less. And I think the cigarette companies have pricing power. I think that smokers are going to, they're not going to quit smoking if a pack of cigarettes gets more expensive. I think they'll cut back on something else to afford the cigarettes. And the stocks
I'll let you go.
British American Tobacco. Yeah, British Tobacco is 11 times earnings. Philip Morris International is 21 times earnings, a little bit more expensive. But the companies are, they're good. Let me see. Japan Tobacco is 17 times earnings. You know. Anyway, who's up next?
Hey Peter, this is Drew.
Yeah.
Hey, so I own Bitcoin. I own the S&P 500. I do not own gold. The way that I see it is just purely from like a returns perspective, looking at anything longer than let's say 6 months or so. So even if you go out to just over a year, Bitcoin has vastly outperformed gold. And if you look at like a 10-year time horizon, gold is averaging about 14% a year, while Bitcoin's averaging 74% a year. And with the S&P 500, that's even beating gold if you count for dividends being reinvested, which is over 15%. And so I'm trying to understand why gold should have a place in my portfolio.
Well, first of all, if you just have stocks and Bitcoin, your stock for now, Bitcoin and stocks move in the same direction, and not only do they move in the same direction, they move in the same direction on the same days. So if stocks are going up, Bitcoin is likely to go up. If stocks are going down, Bitcoin is likely to go down. Whereas with gold, you do also have a negative correlation. Like look at Friday. Everything went down, but gold went up. So it's always good to have in your portfolio a negatively correlated asset, an asset that can go in the opposite direction of the rest of your portfolio, so it can act as a hedge, as a stabilizer. And so if you just got stocks and Bitcoin and no gold, on a day like yesterday, you had nothing that went up. Everything you had went down. But if you had some gold, it would reduce the overall volatility. But when you look at the performance of Bitcoin, to me, you're just looking at a mania. And so you can't really draw anything from the fact that Bitcoin has gone up so much in the past and extrapolate that those returns are going to be repeated in the future. I mean, I think the past performance of Bitcoin is irrelevant to what it's going to do in the future. In fact, if anything, the fact that it's gone up so much means it's likely to go down a lot in the future, not continue to go up, but go way down. Whereas gold is a real commodity, it's a real asset, it has real buyers, there's real users, you got central banks that need gold, but you have industries that need gold. Nobody needs Bitcoin. They'll buy it if they think they're going to get rich owning it. But, when people no longer think they're going to get rich buying Bitcoin, they're not going to buy it. And then the people who own it can't sell it because there's no new suckers to buy their token. So, what I would do if I were you is to say, hey, you own Bitcoin, great. You don't have to sell it all. You can play with the house's money and let it ride if you want. But I would sell some of that Bitcoin and buy gold. And as far as your stocks, I don't know what your stock portfolio is like, but if it's all in U.S. stocks, I would, lighten up considerably and start looking internationally, looking at foreign stocks where I think you've got much better valuations and much higher dividends. And so I think you've got a better, return prospects going forward.
Yeah, that's a good point about the correlation. I see that the gold correlation to the S&P 500 is 0.09, where Bitcoin is 0.32. So there's definitely more correlation with the price movement of Bitcoin and the stock market versus something like gold, which acts as a much more different hedge. I think that's definitely a valid point.
And the good thing about gold too is gold doesn't go down when the stock market goes up. It's not like your gold goes down when stocks go up. Gold's at an all-time record high, and stocks are at an all-time record high. So you're not. You can have a hedge by buying gold, but you don't necessarily lose on your gold if your stocks keep going up. You can make money on both. But I think if your stocks go way down, gold could go down. I think it will go down a lot less than stocks. Bitcoin will go down a lot more than stocks, as you saw on Friday. But you also could have a situation where stocks go way down and gold goes up, like we saw on Friday.
Definitely, yeah. And when it comes to, allocation for someone that's thinking about just hedging with gold, what would you suggest? Maybe 10% of your portfolio or something like that?
Well, at a minimum, kind of that 5-10% in physical gold. But right now, I'm way overweighted. And I'm telling people because I think that gold mining stocks, even now, are still such a good bargain compared to the rest of the stock market that I think the risk return still favors the miners. And particularly now some of my fund, Europe Pacific, EPGIX, you'll get a real good portfolio that will not just include these big names that are, really killing it this year, but a lot of the smaller names that may be killing it over the next few years.
Definitely, yeah. Yeah, I see the use case for sure. I've been on the fence when it comes to deciding if I actually want to, put a little bit of an allocation to gold. I see the use case for sure when it comes to like a hedge. But in terms of placing a majority of, your portfolio in something like gold, I still don't see that just from a pure performance perspective.
I never said the majority of your portfolio in gold, although I have the majority of my stock portfolio only in gold and silver mining stocks. So that's true for me, and that's just a personal decision that I've made. And at this point, it's more than half. It's probably closer to 70% of my portfolio. Not because I've bought more gold stocks recently. I haven't. It's just because they've gone up so much relative to the other stocks that I have that have also mainly gone up. They just haven't gone up as much, as my gold stocks. Like obviously, the gold portion of my portfolio was up, went up today because gold stocks are up so much compared to everything else I own. But I just think that that's the big opportunity. And again, I think that these gold stocks are going much, much higher than they are now. In a way, it may be a little bit similar to the early returns on Bitcoin. It's not going to be as much as Bitcoin. It's not like people bought Bitcoin for $1 and it went to 100,000. You're not going to get something like that, unless there's hyperinflation, in which case it doesn't mean anything, right? The numbers don't mean anything. It matters. Real hyperinflation, right, where everybody's a billionaire, right? So the difference is made. But there are people that bought Bitcoin at 300, 1,000, and then saw a gain 10,000, 20. I think those kind of gains can happen in gold stocks. People can get 10, 20 times their money. Some stocks could go up 50x. I think there will be some that do that. Some of these smaller ones, I'm sure that there will be some smaller ones that do that. Some small company that all of a sudden discovers a bunch of gold, right, that it didn't have, and now all of a sudden, it just goes ballistic. That's going to happen. Obviously, though, it's not going to happen to all of them because a lot of these gold exploration companies will never find any gold. That's the problem.
Yeah. And just one final thought, and then I'll hand it off to someone else. Just looking back at the last 10 years of returns here, just a kind of fun thought experiment. You put $10,000 into S&P 500, silver, gold, and Bitcoin. Silver is actually at the bottom end of that at $32,000. Then you've got gold at $35,000. S&P 500 at $38,000, so just slightly above that. And then you look at Bitcoin, and that's at 2.6 million.
Obviously, but the thing about Bitcoin that people forget is Bitcoin's real peak was November of 2021, and it's more than 20% down from that point 4 years ago in terms of gold. So the gains in Bitcoin were made before 2021. That's where the big gains were made. But most of the people who own Bitcoin today didn't buy it until after 2021. So it's just a small number of people that made all this money in Bitcoin. Most people didn't make that much money in Bitcoin, and they may have made more money if they bought other things. But the problem is, when the bottom drops out of the market, a lot of these people are going to lose a ton of money in Bitcoin. And even some of the guys that got in early on are going to end up losing money if they didn't sell and they kept buying and they averaged up their price. That's like, you look at Michael Saylor now, he just announced his last purchase for MicroStrategy. And so his average cost on Bitcoin is now $74,000. Now, yes, he still looks like he's smart because Bitcoin is $115,000. And he bought it at $74,000, so he's gotten better than a 50% pay for profit. But when he first started buying Bitcoin, it may have been closer to 10,000. I forget exactly where it was when he did his first buy. So let's say Bitcoin sells off to 50,000. Even though he started buying it at 10,000 and it's 5 times what he started buying it at, he'll be underwater on his entire position. He'll be down billions and billions of dollars. because he averaged up. And ultimately that's going to happen. I mean, Saylor is going to have a big loss in Bitcoin. Then the question is, when is he going to be forced to sell it? Because that's when the market really implodes. But of course, when the market senses that he's going to have to sell, it'll implode just anticipating it. But I actually think the big implosion of Bitcoin is going to be when we get mass exodus out of the ETFs. I mean, just like for a year, we got a lot of selling out of gold ETFs. Gold went up anyway because centuries were buying gold as fast as retail investors were selling it to get into Bitcoin. But when you get all the Bitcoin ETF buyers who want to sell, who's going to buy that Bitcoin? No, I don't know. Nobody. So there is a huge crash coming in Bitcoin. I mean, what we saw on Friday is just a taste of what's coming. Because in fact, the ultimate collapse is going to be bigger than that.
Yeah,
and it ain't coming back.
What we saw on Friday, it was just a result of too much leverage in the ecosystem. I personally have not used any leverage, so I'm sitting fine here. And Bitcoin's price is slowly catching up, or actually quickly catching up, I should say, back to where it's been, around 120K. But yeah, that was just a massive, deleveraging type outflow that happened.
There's leverage in gold too. Why did it happen in gold? People are leveraging in gold.
The key is the volatility. So because Bitcoin is so volatile, that is going to wipe out a lot of leverage pretty frequently, which is why I would never recommend to use any leverage in an already volatile asset.
Well, there's a lot more leverage in the system than you may know, and it wasn't all flushed out. Because one of the things the crypto community has been doing is they're trying to promote crypto as security for loans. I mean, that's this whole big move. Is they want Bitcoin to sit in other cryptos as a financial layer that enables loans. And that's MicroStrategy. That's Michael Saylor says, don't sell your Bitcoin, just borrow against it. Take out loans against your Bitcoin. So there's probably a lot of leverage in the system that we haven't even scratched the surface in shaking that out yet. And it will happen. It's just going to take a much bigger drop in Bitcoin to do it. Like some of these altcoins, they went down 60, 70, 80% and flushed people out. Probably not that many people got flushed out of Bitcoin unless they were crazy leverage, like 10 times leverage, 20 times leverage, tight stops. But there may be a lot of people that own Bitcoin. Let's say somebody has $1 million of Bitcoin and they've only borrowed 300,000 against it, 400,000. The volatility from Friday, wasn't a big deal for them. But you get a bigger drop in Bitcoin, and all of a sudden it will be.
Yeah, so I'm of the opinion that unless we have that exponential parabolic rise that you typically see before those huge crashes in Bitcoin's price, the price isn't going to crater. We haven't seen that parabolic move yet.
What do you mean we haven't seen a parabolic move yet? Bitcoin went from nothing to 110,000. That seems pretty parabolic.
Are you familiar with the 4-year cycles that we've seen this far in Bitcoin?
Yes, I know there are 4-year cycles, and that doesn't mean that those 4-year cycles are always going to repeat.
That's true, yeah, and especially reflecting the price in terms of 4-year cycles. But there is the 4-year cycle of the halving that occurs every 4 years, and that's a predetermined schedule based on.
Yes, but it doesn't mean the price is going to go up just because of the halving. It can crash.
That's true, but what the halving does is it reduces the amount that is being able to be mined by Bitcoin miners, and so you have a forced kind of supply crunch every 4 years. And
but remember, there are two factors. There's the supply and there's the demand. And if the supply goes down, but the demand also goes down, and maybe the demand goes down by more than the supply goes down, that's a big problem for Bitcoin.
Yeah, it would be, but the way I see things, the demand is only going up from here. You see more.
Why is it only going to go up? Why can't it go down?
It could go down, and I'm not saying it's with 100% certainty, but you're seeing more institutions, more countries, more nation states, more private companies, more individuals especially with the regulatory clarity that's happened over the last couple of years, and now there's the exchange traded funds, which has legitimized the asset even more in the financial markets.
Well, I would agree to an extent that there are more people trading in Bitcoin than traded it before, so you have more people gambling in the crypto casino. But the appetite for that can change very quickly. And, you now have a lot more Bitcoin that's owned by speculators, whether they think they're investors or speculators. So it's not a lot of die-hard hodlers who are trying to opt out of the fiat system and who, own the Bitcoin, not your keys, not your coins, and, they think in terms of Bitcoin or how much Bitcoin did I have. I say you have a higher percentage of people now who don't think about how much Bitcoin they have. They think about how many dollars they can get when they sell their Bitcoin. And they're trading it like they trade any other asset. And so because of all the hype and all, especially with Trump and the Bitcoin president, strategic reserve, a lot of people decided they wanted to buy Bitcoin because they thought they could make money buying Bitcoin. They thought the price would go up. And so that's where the demand has come from. But I think that as the blue is off that road, as Bitcoin continues to trend lower, which it's been doing, especially versus gold, I think a lot of the people who came late to the Bitcoin party are going to leave. And I think there's going to be a big collapse in the demand. And there's not enough, diehard believers to sustain Bitcoin at $110,000 a Bitcoin. I mean, not even close. I mean, is there enough to sustain it above zero? I guess. But, there's not enough to sustain it anywhere near the current price. And then eventually, even the diehard cryptos that have 100% of their money in Bitcoin, one of these days, they're going to need to sell that Bitcoin because they're going to need to spend the money on something. And so, the air is going to come out of this bubble very fast when it ultimately comes out. And there are a lot of people that they're conditioned. Every time Bitcoin has gone down, it's come back up. And that's true. Every time it's gone down, it's come back up until the last time when it doesn't. And, something can do something 10 times in a row, and that doesn't mean it's going to do it the 11th time. And if it does it the 11th time, it doesn't mean it's going to do it the 12th time. But people can, get lulled into a false sense of security that if they just ride it out, they're going to get rewarded. And it works until it doesn't. And the problem is you never know when the crash is the last one, right? You don't know until it's too late.
Good point. Yeah, I think ultimately we're on the same team, just kind of thinking about it, thinking of it in different terms. But essentially Bitcoin has no top price because fiat currencies have no bottom price. They're going to keep printing more and more dollars as time goes on. So I appreciate your insights, Peter. Thank you for your time.
Yeah, although the top price on Bitcoin is a function of the greater fool. And yes, you don't know, when you're going to run out of greater fools. And so in theory, Bitcoin doesn't have a ceiling, but in practice it does. I mean, I think it does have a ceiling. But right, I mean, gold doesn't have a ceiling because the dollar doesn't have a floor. But gold has a ceiling in real terms. So there's only so high gold's going to go relative to copper, relative to oil. And by the way, oil is very cheap right now relative to gold. I mean, you can buy more barrels of oil with an ounce of gold than you can at pretty much any other point in time other than a few months in COVID. And that's one of the reasons that I've been putting more of my own money in energy, oil related, because I just think that it's cheap. And it's nice to buy things when it's cheap. But there is a relation. So gold, there is a limit because gold is relative to other commodities. But relative to the dollar, gold can be infinite. And of course, it can also be infinite in terms of Bitcoin, right? Because ultimately, nobody may want a Bitcoin. And so if nobody wants Bitcoin, then the value of Bitcoin is also zero.
Hey, Peter, can I ask you a question about prospect generators? And are you invested into any of them?
What's a prospect generator?
Kind of like explain
them to the mining companies and then just retain a royalty you're streaming of it?
Well, I have invested in many royalty and streaming companies, and I own exploration companies. I mean, if you're talking about what you're sounding like is maybe if it's even smaller than that, where
Very small.
like prospectors are trying to get a claim and then turn around and sell it to another company that can develop it.
There's a couple companies that EMX. I don't know if you were able to pull it up in front of you, but they're recommended. They're from like Adrian Day talked about them, and then Rick Rule has talked about some of them. And I just didn't know if you had any of them.
Yeah, and there's an interesting company that we recommended to. I have a newsletter that I write with my partner Jake Hickman. It's called Strategic Assets, and you can subscribe to it at shiftsovereign.com. It's not that expensive, in the scheme of what paid letters. But I know one of the stocks that we recommended was one of these. They like sell the prospectors the picks and shovels for the mine. But one of the things that was really interesting about it is they also take stock in their customers. And I thought that was, they were like a hedge fund almost, because they have a good idea because they see the projects, right? So if I'm selling a mining company drilling equipment and stuff like that, and I'm down in the trenches and I kind of have an idea what these guys got because I'm supplying them with the drilling equipment, if they're willing to accept stock as payment, they must have a pretty good hunch that the company's going to be worth something, or they wouldn't be accepting it. So I thought it was like a really interesting company, because not only do I think the earnings were really going to grow, because they're going to be selling a lot more picks and shovels when a lot more people are looking for gold, but that they were accumulating a portfolio of junior mining companies where they were kind of like almost like insiders in knowing like which companies are most likely to succeed, because those are the ones where they're willing to take stock. But yeah, we're finding a lot of these really small companies in the mining space, and a lot of these are too small to even buy in our funds, right? Because we need even on the smaller ones, we need a lot of liquidity to buy them in my mutual fund, because we also have to buy enough to make it dance. And if I've got, my gold fund is still pretty small, but let's say I've got, we have over $500 million in there. So if we want to buy a stock and it needs to have an impact on the portfolio, I got to put $5 or $10 million into it. But some of these stocks that are really good value, you can't buy 5 or 10 million. But some of my subscribers to this letter, they can put $5,000 in it, and if 100 people put in $5,000, okay, that's doable. But these things can be really good. So that's another thing that people should consider doing. And first of all, everybody on the Spaces should subscribe to the free newsletter, right? You got no excuse for that. We put out a lot of free content, and you go to shiftsovereign.com and sign up to get my free letter. But the free letter doesn't really have investment picks specifically. It has a lot of other information. But we have strategic assets that is specifically designed more to provide investment research to help people who are, do-it-yourselfers who are not necessarily my clients in asset management. You're just looking for research, you're looking for information to get ideas. That's what we do. We give you investment ideas, rather than paying a stockbroker to give you an idea. You just have this letter, and we come up with interesting ideas that you could incorporate into your investment.
And so, like for a long time play in like the gold sector, would you suggest like a bigger company like FNV or something like MTA or like Sandstorm, something that's a royalty streaming company that like gives them money residually?
Yeah, I mean the royalty business is a great business, and kind of what we have in our gold fund, the Europe Pacific Gold Fund, is we've overweighted the royalty companies, and then we've overweighted the really small exploration companies, and so we're kind of offsetting the risk of the exploration companies with the royalty companies. But what we've underinvested in are the companies that have actually done the best this year, which are like the regular larger producing companies. We own all those stocks. It's just that we underweighted them relative to the GDX and the GDXJ. So we may only be up 110% this year, whereas the GDX may be up big trade. There's a lot of spent money in uranium, so it's going to be a lot more volatile. And it's always good to load up on those kind of stocks when they've had a big correction. Right now we're on the highs. Those stocks, they have great days today, 52-week highs. And you look at Capital, which is the biggest one in the
Right. It's going nuts.
And there's a lot of hot money in there too. There's a lot of Trump trade money that has been going into uranium. So I don't know. I think there could be a big pullback at any point in something like that. But the story is not going away. It's real, I think. But I think there's less risk in gold and silver because
I've been listening to you for like 10 years, dude. I've got my whole thing. I've been trusting you, man. So I'm just looking at the next thing. You said oil, and I'm just wondering what else maybe you're thinking about after this move in the gold.
Yeah, we own a lot of oil stocks in our portfolios, and we have been underweight oil, and we're kind of moving towards a more of a neutral to overweight. But it's just out of favor. So many people, think that oil's going to go down, and Jim Cramer was just on 2 days ago predicting an oil crash, and I was like, that's good enough for me. He's predicting oil crashing, you got to be buying it.
All right, well, I appreciate talking to you, man. Thank you very much. You guys have great books. You have great books. Adrian's got great books. You guys should check out their stuff. Thank you very much. Have a good day.
All right. Is that Drew trying to speak, or
I was just laughing at
Funky Nerd, or I'm just waiting for my wife to get home with dinner. That's why I'm still talking. Hello?
Yeah, I guess I'll hold on.
Just texting her to let me know when she's home so I can eat. Okay, who's up next? Quick, before I got cross this guy, cross somebody. JB also, I'll add you. I have crossed. You got to unmute yourselves. Whenever I put you up as a speaker, the first thing you got to do is take yourselves off of mute. Otherwise you can't talk.
Hey Peter, Jordan here.
Hey Jordan.
Hey Peter, longtime fan, going all the way back to the Occupy Wall Street days.
Yeah, I think that was about 2011-ish.
Yeah, about 12 years ago or so. Longtime fan. Just want to make a quick comment here and then ask you a question if I may.
Okay.
The comment is I'll just give you some little bit of insight on the ground game here. I'm obviously just a small retail investor here of some bullion. Mostly just going through Costco. Seems to be the best place to buy it in Canada, especially if you're a member and you have their MasterCard. Between the two, you can get 5% off their price, which is usually 7 to 10% over spot. So it's not so bad because you can just walk in and take delivery. But as of this week, someone as myself who buys about 10 ounces a week, there's nothing in stock. So I went over to my second dealer, which is Toronto Dominion Bank, which is always a sure thing. You get 1 or 2% off if you have one of their debit cards. And I went on there today. I was like, nothing on Costco. Let me jump over to TD, and there's absolutely no silver available.
Yeah, well, that doesn't surprise me.
Of course, there's like Royal Canadian Mint and stuff, and they have their upcharge. But as far as TD, the bars are sometimes sold out. But when you're looking at stuff like commemorative coins, like Black History Month coin or like Toronto Blue Jays coins that are like 70 to 80% over spot. There's none of those either. So it looks like people are buying everything.
Yeah, well, you never want to buy any of that crap, right?
Obviously not, no.
Yeah, because all the stuff that they say is commemorative, it's just a waste of money, especially with these. And I see these guys, these infomercials on television all the time, selling overpriced crap. That's why I set up Shift Gold, is because so many people are getting ripped off. And one of that so many gold companies were ripping off their customers is because they don't have a lot of customers. I mean, not that many people are buying gold. And so a lot of customers, a lot of gold companies, the only way they can make money is by ripping off their customers. But I never needed the money for my gold business. It was always a side business. And I always kept the markups low. And I never sold any of that crap. Because my goal for Shift Gold is I want people to own gold. You know, I mean, in fact, if somebody sends me $100,000 to manage, I make a lot more money off of that than if they take $100,000 to buy gold. But the reason I want them to buy gold and silver is because I think they should own it. I just don't want them to get ripped off by buying it from somebody else, and I sure as hell aren't going to rip them off. So we give everybody a great deal if you go to Shift Gold and and buy physical gold. That doesn't mean you can't be. Look, if you want to be a coin collector and that's your hobby, yeah, you can do that as a hobby. And if you do it well, and you go to auctions and you do your research and you buy coins directly at an auction, you might get a good deal and you hold it. But if you buy a numismatic coin retail, your odds of making money are so slim.
You're getting killed. I mean, even if you want to keep it for 5 years and flip it on eBay, by the time you pay the charges, and if you walk into a coin dealer, they don't care what's on the coin. They're going to give you spot value for the weight of the actual bullion itself.
Yeah, a lot of these. But I mean, there are legitimate rare coins that a collector would want to have in their collection, just like art or sports memorabilia. But it's very different than buying gold and silver to get out of the dollar. No. I mean, if you're going to do that, you just buy bullion. But if you want to buy a rare item because you want to show it off to your friends or you enjoy, hey, I have this coin. There's only 5 of them in the world, and I have one of them, right? And you want to brag about it, and it makes you feel good to own it. But I bought this statue, this sculpture that is made of pure silver when I was at the money show a few months ago. And, it had like $38,000 worth of silver in it when I bought it. It was $1,000 more, And then now the silver's worth $52,000. And I bought it and I paid, more, I paid a lot more than the silver for the sculpture. But I actually really liked the sculpture. I thought it was, I wanted to own it. I have it in my house. And, it's a sculpture of an eagle. And it's like very patriotic. The eagle is perched on a constitution. And
you'll have to put it in the background on your next video.
Yeah, and so, but I knew when I bought it that, look, I'm not making a silver investment here, but I knew worst case scenario, if I ever wanted to sell this thing in a few years, minimum it's going to be worth more than I paid, because I know the silver is going to be worth more than I paid for the whole statue. Even if the sculpture became worthless, which I don't think it will, and I think it does have, I do get more enjoyment out of that silver than a bar of silver in a vault, right? Because this is a beautiful work of art that I think is a statement piece in where I have it. And so, just like when you could buy gold jewelry, I have a gold bracelet that I got, and it's pure gold, and I like the way it looks, but it's not the best way to invest in gold, but it's already way worth more than I pay. I could sell the bracelet now for more than I paid for it. But if you buy a bracelet that's only 10% gold, like most people, you could go to a jewelry store and you buy a gold coin, gold bracelet, and you pay $2,000 for a gold bracelet that has $200 worth of gold in it. I mean, you're not going to make. You need a 10x move in the price of gold to get your money back.
I appreciate all that, Peter. I'd just like to ask you a quick question before your talented wife comes home with the grub. So just to mention on the Occupy Wall Street, just to kind of sidetrack here, in the future, the next couple of years, if there's another meltdown or there's some kind of financial mayhem, and out of those ashes there is like a sequel to Occupy Wall Street Part 2, would you be able to, in this age, just to walk down there like you did in your suit and tie without security, or have things just changed?
Yeah, obviously, look what happened to Charlie Kirk, but yeah, I think that, I don't know that I would do that nowadays. I don't know that would be a smart move for me to be able to go out like that
And I recommend anyone who hasn't seen those videos, they're still on YouTube. I mean, you were down there right in the heat of it, and everyone, there were some heated questions, but everything was relatively cordial back then. I think you paid some guy to hold a sign for you. It was super cool. I mean, there's lots of good ones.
No, it was my brother. I didn't pay him. It was my brother.
All right, yeah. I figured, I was like, Peter probably just paid this guy to hold his sign and walk around with him, and I was like, that's awesome. That's so
No, my brother Andrew and I were down there.
Yeah, but for the most part, it was fine. Like, you didn't, obviously only so much was caught on camera, right?
Yeah, I was still engaged to my wife now at the time, and we had a date. We were going on a date, and we went to the theater. So I remember I had a rush from there. We went. I don't remember what show we
You didn't even get home, just take a shower and change. You looked pretty sweaty there for a bit.
No. And it was a stage. It was a play. I don't remember what it was. It wasn't a movie. It was a live theater in New York.
Well, thanks for your time, Peter. That's great. Thank you so much, sir. I appreciate you letting me on the call. And it's actually Thanksgiving here in Canada. So just for my family, New York, happy Thanksgiving, early American Thanksgiving for you, and God bless.
Yeah, it was Columbus Day here, so our bond market was closed. But Canadians, they didn't have any chance to buy gold stocks today. They're going to be showing up tomorrow and see so much higher prices than they had. In fact, I think that's notorious that sometimes some of the biggest moves in the miners happen when Canada's shut for a holiday, and they can't buy them. But yeah, thanks for acknowledging my wife. She's got. If you don't know, my wife is a bit of a musician. She does a lot of things, but she's also a musician.
Yeah, I follow her on Spotify. Yeah, it's pretty good tunes there. I appreciate kind of that new wavy stuff.
Her next song is coming out soon. I forget when it drops, in a week or two. She's got like 4 of them up on her channel right now. But you should listen to her on Spotify. She's Living Cats is the name of the group.
And just remember that song, Jerk.
On YouTube.
That's
some of the videos.
And that song, Jerk, is not about Mr. Schiff, everyone. Just in case anyone asks.
No,
That's not about. Okay, God bless Mr. Schiff. Have a good evening.
All right, thanks a lot. Who's next? Anybody?
Yeah, just
Anybody?
a quick follow-up question to what I was asking about earlier. I was wondering what your thoughts are on gold ETFs for someone like me that might be looking for just a small allocation for just hedging perspective.
Yeah, look, for all practical purposes, they're probably fine, but I still think that people should have some physical possession, especially if we get to a situation where we do have runaway inflation, we have price controls, which means we have shortages in black markets. In order to get things that you need, you may need some silver coins, and it doesn't do you any good to have them sitting in an ETF, but if you've got them in your hand, you could use them.
Peter, I have a technical question for you real quick. If I'm being heard. Yeah, hey, big fan. So, real quick, I don't know if this has been discussed in this space, but the idea of the U.S. Treasury repricing gold at its actual price rather than the, like $42 that it's currently marked at. I've been trying to get my head around this lately, and it just seems absurd. Like the thing.
It's October 13th. Gold is at a 4,100 an ounce. We're listening to Peter Schiff. This is the Peter Schiff podcast.
Congressional hurdles, but also that the big one that I really don't understand. I don't grok this. Is that it would be this big signal?
It just seems absurd like that.
It's this big narrative signal globally or whatever against the U.S. dollar. But to me, that makes no sense because all the experts in leadership are values.
Yeah, I mean, basically, well, here's the thing. So basically, it's just an accounting entry, so it doesn't give us any more money. But yes, if the U.S. were to devalue the dollar, then it would be an admission that the dollar has lost 99% of its value. Because right now the dollar on the book is $8.22. But if they devalue it to its current market price, where now the official gold price is 4,000, that is a massive devaluation of the dollar.
What I don't get is that just says that same thing about every other fiat currency. Like you could say that the yuan maybe and the ruble lately, like those countries have been accumulating gold, but like they still can't compete with the dollar in terms of fiat currencies on a global scale. Like my understanding is that forex market, which I'm pretty new to understanding how that works, but
It's just that everything is, these fiat currencies are traded on the they're valued on the margin in these order books, against each other. So if we're saying that if they were to revalue the gold to what its actual market price is, that's basically just telling the world that all the fiat currencies have dropped in value that much.
Yeah, I mean, really, it's a non-event to do it because it doesn't have any practical purposes. I mean, I think right now, like if you wanted to pay your taxes, for some reason you wanted to pay your back taxes, and you were going to use gold coins to do it, they wouldn't give you that much credit because they would give you the official price. If they devalued it, then they have to accept it at the new official price. But I mean, no one's really paying their taxes in gold coins. If they want to pay their taxes, they're selling their gold coins. But I guess if you have the gold coins, you can pay your taxes without having to sell the gold coins and realize the capital gains tax. But I don't think that we're ever going to officially do that unless we're trying to go back on a gold standard, in which case we have to do that. But there's no practical benefit to the United States government. You're calling attention to how much value the dollar has lost. But as I said, I mentioned it earlier in this spaces that the proponents of that are promoting it because they think that it's some kind of windfall that we can use that extra money somehow to pay our bills, to pay down the debt, to buy Bitcoin. No, there is no extra money. It's just an accounting entry. The gold doesn't change. It's the same gold. It doesn't matter what price we want to pretend it's valued at. It's worth what it's worth. And the only way we can really recognize that money would be to sell the gold, which if we sold it now, we would sell it not for $14, but for $4,000. So we either have to sell the gold, or we'd have to...
It's October 13th, 2025. We're listening to Peter Schiff. Gold's at 4,100 an ounce. Again, it's October 13th, 2025.
Kind of reminds me of that idea of minting those platinum coins.
Well, we have to. It's October 13th.
A couple years ago or whatever. But thanks for your answer. That's interesting.
Yeah, that platinum coin idea was also bandied about.
Listening to Peter Schiff podcast, October 13th, 2025. Gold's at 4,100 an ounce. This is John Kitover running for the 16th District of Illinois. We have to stop borrowing, we have to stop spending, we have to stop taxing.
Let me just say thank you so much for the advice. I've been an avid listener and thank you for having me out. The first question is, as a young man living in the United States, seeing everything going on, what would your recommendation be? Would you say look to exit the United States? Would you say look to stay in the United States? How do you see the future of somebody who's, say, 24, 25, 26, living in this inflationary setting? And what would you do if you were that person, knowing what's going on in the markets?
Yeah, look, I don't know. The best opportunities for young people may well lie outside the United States. A lot of it is going to depend on how the U.S. reacts to this crisis. Is it a catalyst for change in a positive direction, meaning less government, more capitalism, more freedom? In which case, it is going to be an excellent opportunity. If on the other hand, the reaction is to fully embrace even more socialism, even bigger government, with more regulations and more controls on the economy, then yeah, you're probably going to want to leave. It'll probably be so much easier to succeed if you leave the country than if you stay. And the key is, I mean, obviously, if you're politically connected, maybe you can succeed here. But, if you don't have the connections, if it's just going to be, you want to work hard and succeed based on your own merit, you want to live in a country where, it's easier to succeed on merit. You want to be in a country that's, has the most amount of economic freedom. That'd be great if that country was America, but it may not be. I mean, and it isn't right now. And it's not that we don't have any freedom in this country. We still have some. We have more than a lot of countries, but not just as others. But we could end up losing a lot of freedom in this next crisis. That is the scary part, because we lose a lot of our rights whenever there's a crisis. The government uses that as a
This is Peter Schiff. It's October 13th, 2025. Gold is at $4,100 an ounce.
Currency crisis. It's going to be worse than anything we've experienced. The and monitor. And so the government, what the government does, even though the government is going to be responsible for all this, they end up blaming capitalism, and they use it as a way to expand their power.
And then as a follow-up to that, I know you talked a little bit about oil tonight. If you could just talk a little bit about why you think oil is going to increase, and then also if you could let me know whether or not you think it would be an intelligent investment to potentially start to accumulate Chinese RMBs at the thought that they're potentially going to make their currency convertible to gold.
Yeah, I think the RMB is going to go up. I think the Hong Kong dollar is going to go up. It's right now pegged to the U.S. dollar. I think eventually the peg's going to break and the Hong Kong dollar is going to go up, not down.
It's October 13, 2025. Peter Schiff, podcast, gold's at 4,100 an ounce.
Because I really don't see the downside of the Hong Kong dollar relative to the U.S. dollar. There are a lot of people that think that it's going to break the peg and it'll crash, but I don't think that that's what's going to happen. But the reason I'm bullish on oil is when the dollar really goes down, I think worldwide consumption is going to go way up. I think that instead of loaning money to us and buying treasuries and buying mortgage-backed securities, I think the rest of the world is going to spend more of their money on themselves. And I think when the dollar goes down and other currencies go up, that's going to create a lot of demand for oil, because when the dollar goes down, the oil price automatically goes down because the oil is priced in dollars. So let's say the dollar got cut in half in terms of Chinese RMB. That's basically like oil being half the price. Well, what's going to happen to demand for oil in China if the price gets cut in half? People are going to use more oil. More people are going to buy cars or buy other things that need oil. So I just think global demand for oil in a weak dollar environment is going to go way up. And I don't think there's going to be enough extra supply to be able to meet that demand. So I think oil prices are headed a lot higher. And I still think alternatives. I mean, the world's going to be collaborating. Look at all the energy that AI is going to be consuming. Where's that going to come from?
Are you not concerned, though, at all about the risk that the United States may play in suppressing the oil price? I mean, we've already seen the United States with the deal made in the Middle East that's kind of been, put on topic today, that the U.S. very much so does still have control over the Middle East, and now they are also producing a large amount of oil as well. Do you not see any issues with maybe excess supply?
No, because I think there's going to be a lot more demand. I don't know that there's enough supply coming out of the Middle East. But the other problem, too, is, we have a pretty big oil industry here, and our costs
Candidate John, it's October 13, 2025. We're listening to the Peter Schiff is now at report. Gold is at 4,100 an ounce. Like, share, subscribe.
Overseas and a lot of drilling shutting down in the U.S. That's going to also decrease the supply. And I don't think Saudi Arabia is sitting on enough oil to compensate for the loss of U.S. production if prices are not high enough to be profitable.
Thank you, I appreciate it.
Let's see.
Hey Peter, I have a couple of questions. Thank you very much for the opportunity to be up here. It's an honor. You mentioned, first of all, I think it's amazing for you to be up here like for 4 hours. You should share some dietary tips with us as well as financial tips. But I'm interested. You said that you think that we could go back to gold standard. I think I was just looking at some of the stats between 2020 and 2022 because of COVID. We printed 40% more kind of money supply, which is called M2. Looking at the facts, it's highly unlikely. What makes you think that we would, despite all the evidence, which is kind of
currencies don't work. Every fiat currency that has ever been used has eventually become worthless. And the nations that have used fiat currencies in the past, went back to gold. And I think that was going to happen. Now, you can look at what happened in the last
This is
hyperinflation.
Please don't scroll. I'm just trying.
Got back to a dollar peg. Like what stops their currency from collapsing was pegging it to the dollar. Right?
Can we start this live? This is the
But the
Peter Shift
dollar
podcast.
itself is no longer trusted. When the dollar is crashing, what are you going to peg your currency to? Now you can say, well, they could use the euro, they could use the yen, but I think in a real dollar crisis, where people have been burned badly in the dollar, and they've seen like the dollar go up in smoke, are they really going to have a lot of confidence in the euro? I mean, hell, if the dollar can collapse, why can't the euro? And of course it can. Why can't the yen? So I think when the dollar crashes, the only thing that's really left that could work to reinstill confidence and take its place would be gold. That's why when so many people have said, oh, the dollar's never going to lose its reserve currency status. And the reason they think that is they don't think any other currency would be in a position to take its place. And I've always agreed, the euro is flawed. The yen has got its own problems, right? Who the hell are they going to trust the RMB? The Swiss franc is a decent currency, but I don't think Switzerland is gonna be able to fill that void. There's a few other decent currencies that people might have confidence in. But it always struck me that if there's a crisis in the dollar, it's a fiat currency crisis. It's not going to just be a dollar crisis. And so, how do you reinstill confidence in your fiat currency? Well, you make it no longer a fiat currency. Back it by gold. And that means now the people can trust that it actually has value. Right? There's something real here. We can't just print it at will. The amount is limited by the amount of gold there is. And we set up a rate. This is how much our currency is worth. And there's X amount of gold behind each unit, and now the market can adjust to that. So I think that's where we're going. I don't see any other way out of it. But it's not like governments are going to go there right away. They're just going to eventually be forced there. But what I do think will happen is that individuals will adopt gold on their own. That's why things could happen with gold tokens. That's why I'm going to do my own. That's why I'm working on something right now. I'll be talking about it very soon. I don't want to just mention it now because I don't want to get overwhelmed with orders yet. But I am working on my own monetary system where buyers and sellers will be able to have accounts with gold and transact in gold to be an exchange and ultimately either redeem it in physical or redeem it in tokens and trade it on exchanges or exchange it. So I think that the private sector will enable people to go on a gold standard whether the government goes there or not.
It's October 13th, 2025. Gold's at 4,100 an ounce for listening to the Peter Shift podcast.
And you can use legitimate currency. Using gold and silver coins, yes, that's a pain in the ass. But using gold and silver electronically, if I can create a platform where it's just as easy to spend and earn gold and silver as it is dollars or euros or yen, where it's all the same transaction, then that can happen across borders. That can happen, overnight, or not overnight, instantaneously.
Gold's at 4,100 an ounce.
Gold and silver are available as an alternative to dollars. People will choose it, especially people who are earning dollars, right? I can understand why somebody who has gold doesn't want to spend it, but I can see why somebody who has goods and services to sell wants to receive it. And so ultimately, I think a gold-based monetary system will be driven by the people who want to be paid in gold, not the people who want to pay for things in gold.
Peter, would you say that we're actually already kind of seeing that with what the Chinese have set up in the UAE and the deals that they've made with Saudi Arabia for receiving different shipments such as oil and other petroleum products for their RMB at a cent gold price?
I missed that. What did you say?
would you say that what you were just talking about is actually already happening with the different gold vaults that China has set up across the world, so that, for example, when they take oil in from the UAE or from Saudi Arabia, they're exchanging the barrels of oil for RMB at a specific gold price, so that they can then go and exchange the RMBs that they're paid for gold at this price.
Yeah, I think that, and Russia announced that a long time ago too. They were doing something like that. But at some point, it's going to be more overt, where I think eventually oil is going to be priced in gold. Now, maybe Trump is delaying that in Saudi Arabia and the Middle East by, getting that part of the world, more in bed with the U.S. Because Trump probably understands that Saudi Arabia needs to keep pricing its oil in dollars. But I think the biggest consumers of oil in countries like in China, they're not going to be dealing in dollars. They're moving away from the dollar. Russia's moving away. I think India's going to be moving away. So that's where, and they're not going to be trading in dollars. We benefit.
This is the Peter Schiff Podcast. It's October 13, 25. Gold's at 4,100 an ounce.
And then, Peter, one last question. I know that there was some chatter over the weekend. I think it started on Friday with when the U.S. became aware of the letters that the Chinese were sending out to different countries. I believe a country shared some of those letters with President Trump. But I think that it's now becoming a bit more evident that, there is a little bit more hostility there than what people may think.
It's October 13, 2025. Gold's at 4,100 an ounce.
Into what some would say is attack mode. Do you see any risk to the United States stock market, since the Chinese do hold about $5 trillion of U.S. equities, and it doesn't really seem that a hostile nation would want to keep holding those assets? Do you see
Yeah, look, there's a huge risk. I pointed this out, and I'm gonna hop here. I mean, I'm doing this for 3 hours, so I'm gonna make this the last point. But yeah, I've been warning about this for years, that especially under Biden, when he sanctioned the Soviet Union, how dangerous this was to create this precedent, to send this kind of warning to our creditors that, hey, we can fuck you over whenever we want, because people don't want to get screwed over. And if you don't want to get screwed over, then don't hold dollars. But we need them holding dollars. Because if not, who's going to do it? Americans don't have the savings. And we need them to take our dollars so we can buy all the products, because we don't have the factories to build them. And so I knew this was a very dangerous course that both Biden put us on, and then Trump continued on the same path. And that's why the people that don't understand the phony nature of our bubble economy, they don't realize that the bubble's been pricked, because they don't know it's a bubble in the first place. Just like they didn't know that the subprime was the pin that pricked the credit bubble, they don't realize that gold is the pin that's pricking the whole U.S. economic bubble. And it's happening as we're talking now. By the way, so gold's now up another $16 on the night session. So we're trading in new record high territory, about 4,126. Silver is up another 15 cents. So here, we're closing on 52.50. Look, this is talking about, Nero fiddling while Rome burns. I mean, people are going to look back. How could you have missed these signs? Meanwhile, too many people are, preoccupied focusing on Bitcoin, and they're missing the forest for the trees here. What's going on with gold, right? And so to fit and end this spaces, if you take nothing from this, you got to do something to protect yourself, right? I'm not talking just to talk, and I want to educate people, but I want to protect people. I want, particularly Americans. I mean,
Peter Schiff, Gold's at 4,100. It's October 13, 25.
Interest in as many Americans as possible not going broke, and a lot of Americans are going to go broke when the dollar crashes. And so you got to get into the gold and silver. website at Europac.com. You can prospectus, you can read about it. Gold stock investing is different than buying gold and silver. I look at gold and silver as savings, as money. My stocks are risky investments. They're companies, things can go wrong, things do go wrong. But I think the upside potential is so great that it's an asymmetric bet. I think you can make a ton of money if, yes, you can lose. Let's say the company goes bankrupt and you lose everything. That's why you diversify. I think the chances of my mutual fund going to zero are but not all of them, right? But even if you accept that you can buy my gold fund and it can go down 80%, let's say, that's a lot. But if you put $100,000 in and it goes down 80%, okay, you lose 80 grand. But it can go up 10x. So you put $1,000 to $100,000 in there and you make $1 million. So if I look at it, maybe I got a 50% chance of making $1 million, and I've got the same chance of losing 80,000. Now, I think the odds of my fund going up 10x are greater than the odds of it going down 80%. Now, I don't know exactly how to quantify it, but obviously, in the middle, you can figure, well, what are the odds of it doubling? What are the odds of it tripling, right? Obviously, the odds of it doubling are greater than the odds of it going up 10x. But I think if you do a probability or a weighted return, how much money can I make in gold mining stocks? It's a hell of a lot more than you can lose, right? A hell of a lot more. And so I think it's a great speculative investment. And I think there's a long way to go in this trade. But even if you're not willing to gamble, look, my fund, my dividend payer fund, is up almost 50% on the year. You can get information on that at Euro Pacific Asset Management website, Europac.com. But this is not a gold fund. We have a few gold mining stocks in there, but the majority of the stocks in there are not gold mining stocks. They're very defensive. Yet the year-to-date return is almost 50%. And the year's not even over. I'm talking about the calendar year. So I think international stock investing is the way to go. I think the U.S. markets are way overpriced, and they're coming down. Whether they come down in nominal terms, it's hard to say. But in real terms, in relative terms, I think people will be much better off with international stocks.
Gold's at 4,100 an ounce. It's October 13/25. This is the Peter Schiff Report.
So go to our website at Europac.com. Don't forget, I'm probably going to do a podcast on Wednesday because on Thursday I'm leaving for Orlando. I'm going to be at the Money Show for Orlando for a couple days. But on Wednesday, so go to my YouTube channel, subscribe to that, Peter Schiff. And my weekly gold podcasts have been gaining in traction ever since I started doing them. We have a website at Schiff Gold has its own YouTube channel. I'm doing this weekly market wraps. Make sure and subscribe to that channel. Follow me on X. If you're listening on these spaces, if you don't now follow me, I just recently hit 1.2 million followers. I need to have a lot more. There's a lot more than 1.2 million people that would benefit from what I'm saying. Doesn't know about me, hasn't read any of my books, doesn't listen to my podcast. Tell them to listen to the spaces. The spaces are all there. Right? I've been talking for 3 hours, but people can listen to it tomorrow, the next day. They can go up on X and just listen to the whole thing. You don't have to listen to them live. They're all up there. And people need to understand what's going on. You can go and read my book. My book, The Real Crash, that is now over 10 years old, is more relevant now than the day I wrote it. Because the real crash is actually about to happen. Right? I wrote that book to let people know that the 2008 crash wasn't the one that I was talking about when I wrote Crash Proof. Even though I predicted that crash, that was just what was going to start the clock ticking for the next crash, which I never expected would take this long to happen back then. We kicked the can down the road a lot longer than I thought, but because we succeeded in kicking the can down the road, also made the problems that I was concerned about 20 years ago much worse. And so now the ultimate collapse is going to be much bigger, which means the stakes are higher. You'll lose a lot more if you're not protected, but you'll gain a lot more if you are. That's why the strategies, I think, are more important to adopt now than ever before. And again, I mentioned earlier in the podcast, go to Shift Sovereign and try to get a free newsletter. It's worth every penny. And we put out 2 or 3 a week. It's at, and we have strategic assets that you can subscribe to for more investment ideas. But anyway, I want to thank everybody who participated in this spaces, and I will be back doing more of them in the future, so always be on the lookout. And if you follow me on X, you'll always get alerted when I'm doing a spaces. Bye for now.
Okay, this is the end of it. Thanks, everybody. Go to johnforcongress.com.
It was Proposition 783 in California, and it was a black butt plug. That's all I want to say. Thank you.
Wow, we have a ton of dogs. Serendipity. A lot of dogs.
My safe word is pineapple.
That just makes you a swinger if it's upside down.
Does everybody remember that video?
I support university because I have doctors on this app that I have ever met in my life. Maybe because I don't go to the doctor very often. But it's very exciting.
And I'm such a slut for authority.
Shit.
So you like getting beaten with a nightstick?
Listen, let's just answer a question. A lot of my colleagues are on this app. We've been demonized for vaccines, and some of us believe the way you do, and we're just trying to regain our names. That's all.
Whose names of vaccines? Like, is it your mom's name in vaccines, or is it your name?
I think it's the Sackler's name. Oh no, that's Oxycontin. It's not my name. That's not my name. That's not my name.
So what are you bitching about then?
We've been demonized just because we wanted to inject 6-month-olds with rapidly mutating RNA virus vaccine. I mean, it's not our fault. That seemed like a good idea at the time.
Yeah, I know who they are. I've written them down.
We gotta realize we can lose our medical license for not vaccinating 1-day-old children. You know,
Well, it depends on the protocols for the state. I mean, like
for the states,
glioblastoma, you can do with like eye drops and like a special like light, and find out if there's like a glioblastoma within the child's eye. You can do that at birth, and it costs $3. And like those are the kinds of interventions I love.
should we up the amount of Mongolian cancer rats in hospitals that can tell who has cancer?
I'm gonna go on mute. I'm sorry.
I mean, I think it's a good idea. The rats work. They use them in Africa. Literally put 5 different samples of blood, and they find out who's got not polio.
Okay, I'm going to end this recording. Hope everybody enjoyed it. Go to johnforcongress.com. Okay, everybody go to johnforcongress.com. Thanks for being here.